Dinesh Somani, founder of Intellitrade Services, joins us on the show. Mr. Somani, a very good afternoon to you, and thank you so much for taking time out and joining us. First things first, it's been quite the volatile week. When do you see the dust settling when you talk about gold and silver? Because, you do have mild pullbacks that you've seen. Largely the kind of movement that we've seen is that every time that prices sort of move forward and in good stead, there's a pullback that you see.
Yes, definitely. We have seen a good and a decent pullback in the prices of gold and silver. We've seen the low of 43.80. From there, it is almost trading around $5,200. As far as COMEX is concerned, since last 4 weeks, COMEX gold is showing a weekly gain, so that's also a good sign. Overall, in last 8 to 10 days, what I could see is it is trading in a very narrow range of 51.30 on the downside, where it's acting as a support, whereas 52.20 it is acting as a resistance. If I look at silver, $85 was holding for quite a long time. After it crossed 85, it went up to 91.30. It's steadily trading around $90. So overall, I see a broader picture. If I look, prices of gold are more or less in a very narrow range of say $100 to $110. While silver, I look at it from $85 to $92. Unless and until prices move past that $92 mark, I don't see a major up move in silver as far as the comic silver is concerned.
Absolutely, but what kind of levels are you exactly looking at when you talk about the next 3 months? Is there any level that you're looking at as the key support level when you talk about silver?
Yeah, definitely prices have bounced back from the 74 level marks quite a bit time, but it is wrestling around 94 to $95. So overall, if I look at the broader picture, I see $102 max on the upside. Downside, I see $74 should act as a baseline support.
No, absolutely. And I also wanted to put the spotlight on that entire route that we saw coming in the month of January, because we're just about wrapping this month. I wanted to get a check going for our viewers in terms of the context, in terms of the month also gone by. Now, when you talk about silver and gold prices, you did have silver hitting that $121 an ounce level, thereby also declining 31%. It was a record decline that you saw coming in. Do you think that that entire dust, that entire volatility and those concerns have largely settled? Or are you looking at a little bit of a concern there when you talk about silver?
I see more of a consolidation now. The major rally has been already passed out. If I look at January 2025 from there, in Indian terms, the prices were trading around 86,000. From there, it moved up to 4,20,000, almost 4 times in a year time. And if I look at COMEX from $50 to $121 is almost more than double. So I think the major rally has already happened. It has taken place. The volatility will shrink days ahead, and I see more of a consolidation as far as silver prices in domestic as well as international market is concerned. In the domestic market, if I look at MCX prices, 2,92,000 would be the major resistance, 2,25,000 would be the support. I think prices should consolidate between this broader range for the next 1 or 2 months.
Absolutely. And Mr. Somani, how are you looking at the month gone by when you talk about gold as well? Let's just also put that into perspective before we move on to other commodities. Because, you did have that $5,600 an ounce level roughly being reached. After that, you did have quite some decline coming in as far as gold is concerned. Now, of course, gold is a much bigger asset in terms of market cap. So the route that you saw was a little bit limited when compared to silver, but just the fact that there was such a rout when you talk about gold is quite the concern for traders as well. Do you think that that concern, that worry on the trader front has really settled in when you talk about gold as well?
As far as geopolitical tensions are concerned and the tariff are concerned, I think gold would definitely will try to move further. If I see a broader range, the $5,600, which was the high we've seen in January, from there the prices collapsed almost by $1,200 to $1,300, and it almost tested 43.80. From there, we've seen a decent pullback, and we are very just close to the all-time high of $5,600, just $400 short of that mark. So we have seen a sharp up move in gold prices compared to silver. If I look at the COMEX gold and silver ratio, which was at times 80, 82 mark, it went down to 40 level mark, and then the strong pullback towards the currently 57 mark. So gold is definitely showing a strong strength compared to silver, and we expect gold prices to even move further from this level. So overall, if I see 5130 should be the good support, that buying level. Upside could be anything around 5480, 5400 levels. So I think gold would be a better bet for the next quarter compared to silver.
Absolutely, all that sparkles is going to be gold, looks like, and that's the kind of sense that I'm gathering from what you have to say also. But let's also shift focus onto oil, because when you look at the last 2 weeks thereabout, you're looking at those 7 month highs thereabout, and that consolidation really coming in. There's a lot of volatility, of course, still at play when you talk about Tehran and Washington, and there's a lot that still remains unanswered when you talk about oil prices. But given the kind of factors that we have, how are you looking at oil prices?
Mostly geopolitical tensions are the major reason for the pullback in the crude oil prices. We have seen in MCX prices were close to 5200 level marks. From there, it moved almost by 800 points to 6000 levels as of now. If I look at the international market from $58 to $65, it's stabilizing right now. But technically, the charts look bit stronger. And we have seen the higher highs and higher lows, which indicates a steady and uptrend in the crude oil prices. As far as the MCX levels are concerned, I think 5800, 5820 should act as a good support for the next 15 to 20 days, while the upside 6120 should be the major resistance level. We expect buy on dips. That could be the strategy, better strategy. Anything around 5900, 5850 should be the good buying level. 5750 should be the stop loss for the long term levels. Upside expecting a price around 62 and 6450 levels.
Absolutely, and when you talk about copper as well, I quickly wanted to shift our attention to that before we're done. We wrap up this conversation because there's also copper where you've seen quite some strength, or at least some semblance of strength coming back in terms of the entire week gone by. How are you looking at this particular development, and what kind of levels are you watching out for when you talk about copper?
Yeah, being an industrial commodity definitely follows silver more or less. Prices have moved up quite a bit in the last 2 to 3 months. In Indian MCX market, we have seen prices move up from 1920 levels to 1480 levels. Then a sharp correction in line with the silver prices. Prices stabilizing around 1140, 1160 levels. I think the momentum is slowed down a bit for quite some time. But anything around 1180, 1200 levels, that would be a good opportunity for a long-term investor. Upside is still intact. We may expect prices to move to 1320, 1340 levels in a short span of time. 1140 should act as a major support zone.
Absolutely. And Mr. Somani, before I let you go, the conversation would be amiss if I don't ask you which commodity out of the ones that we've discussed thus far are you most bullish on? Because, of course, you do have some of the brokerages that are quite bullish, looking at somewhere close to $6,000 an ounce when it comes to gold, but don't want to be influencing your decision here. Which are the ones that you're looking at, and which is the one commodity that you're most bullish on right now?
Definitely, we've seen since last 25 years, gold has given a return of 15% on an analyst basis. So I think the best commodity to bet on is gold as of now. Gold would be a better performer in the next quarter compared to any of the commodities. My second bet would be on the crude oil price.